What's up everyone, my name is Jason, and in today's episode, we're going to break down the 401k. I want to do a beginner's step-by-step guide on how you can start a 401k and optimize your return so you can retire early and enjoy your retirement with a buttload of cash. All right, all you have to do is hit that like button and subscribe to the channel. Stay tuned to this video, and I'm going to go through each and every step you need to know about your 401k. Let's get into it. If you take a look at your screen right here, this is your basic overview layout of your 401k. Every brokerage is a little bit different, whether you have Fidelity or Schwab or ADP. This one in particular is ADP, but they're all very similar. So I'm going to show you just what you have to do to get started and start investing with your 401k. Okay, the first decision you're going to have to make is whether you want a traditional 401k or a Roth 401k. The difference is the traditional 401k, you pay taxes later. And in the Roth 401k, you pay the taxes now. So if you're in a situation where you think you're going to make a lot more money later in life, you might want to do the Roth 401k. That way you already paid the taxes on your 401k money. The traditional 401k, you don't pay taxes now, you wait to pay them later. All right, everyone, I'm going to share with you my 401k. I currently have $124,000 in this 401k. I'm doing a 5% Roth 401k, so I opted to pay the taxes now so I do not have to pay them later. And you can see my performance, I'm absolutely crushing it. From 521 of last year to this year, we're up 23%. We're absolutely crushing the game. That's why you have to subscribe to this channel so you can get all my 401k and stock updates, right? So we started this over a decade ago. That's why we have $124,000. Okay, so you made the choice. You picked the traditional or you picked the Roth 401k. Step 2 is you're going to pick your own investments. What most 401k providers do is they put you into a target fund. And so what you want to do is you go to your investment page and you go change how future contributions are invested. And then this page is going to come up. You're going to see all the different types of investments that you can choose for your 401k. There's a buttload of them, right? And right now you could see I have 40% in the Vanguard 500 index fund, 50% of my money goes into the Vanguard index fund, and then the other 10% goes into the Vanguard Information Technology Index Fund. So what the heck does all this craziness actually mean, right? Because they don't give you ticker symbols, they don't give you a lot of information at all whatsoever, which is kind of annoying, right? So I'm currently in this Vanguard Target Retirement Fund. So what you want to do is hit your Command C, you copy that, you open up a new tab and you paste it into your web browser, right? And then this is going to pop up. And then right here, you're going to see it's a mutual fund, and then they're going to give you the ticker symbol, VFIFX, right? And that way you can go into Yahoo Finance right here, match that up, and you're going to want to click on it. And this way you get to learn a little bit more about this fund. They're giving you a 2.15% dividend, which is great. But what I like to do is you have to go to performance and risk. I'm going to zoom in on that for you guys right here. So year to date, they're up 8.6%, and the average 5-year return for this index fund is 10.44%, which is okay, right? It's not great. It's not the best. So what I did when I first got started out is I literally copied and pasted every single one of these into my web browser. I'm not going to do that right now because it's obviously going to take forever. But just for instance, we're going to do the growth index fund. I did the copy and paste, and I'm going to come down here and look at performance and risk. And this one you see is 18.31%. Would you rather have 10% per year or 18% per year, right? I'm going to opt for the 18%. And then if you copy and paste some of these, like this one in particular is the Lord Abbott High Yield Fund. It sounds good, right? Ooh, high yield sounds really good. So they're going to give me 7.12% in dividends. That sounds pretty good, right? Until you see the 5-year average return is only 3%. So even with that 7% dividend yield, you're only getting 3% in growth in the actual index funds. So you're averaging around 10% per year. That's not very good, because if you go on other funds, like this one is the Vanguard 500 index fund. They're giving you 1.38%, which is really good. Another thing I want to show you guys that you really have to take into consideration is the expense ratio right here. It's only 0.03%. This is how much you're going to pay the people who manage this index fund. So this is Vanguard's index fund. So you're going to pay them 0.03% per year. So this is the Vanguard 500 index fund, and this is 11.89% year to date, which is really good because we're not even halfway through the year. And the 5-year average return is 15.18% plus that dividend. So you're looking at over 16% per year. This is what you have to do, guys. You have to put the work in. You want to go into each and every one of these funds, pop them in your browser, see what that 5-year average return is, and then kind of mix up your assets, right? So here is my personal rate of return. This quarter, we're up almost 8%. In the past year, we're up 23%, which is really good. And the 5-year, 10.49%. There was that really big downturn a year and a half ago. So that's why my numbers aren't as good as they necessarily would be on average if you look out on a wider scope. But here's my pie chart, right? So right now we have $71,000 in this target retirement fund. So we want to keep this nest egg safe. We have another 401k where we're a little more risky. So this one is our safe one. So half of our money is in this target fund and it's getting decent returns. And then we have a lot of money spread out through other funds, the Vanguard 500, the Growth Index, Mid Caps, and Information Technology Index Fund. So I wanted to diversify our portfolio with a target retirement fund, which is more of a mix of stocks and bonds. And then we have the straight stocks, which are these Vanguard index funds, the Growth, the 500, the Mid Cap, and the Information Technology. 40% is going into the 500 index, 50% is going into the Growth Index, and of all my new money going in, 10% is going into the Vanguard Information Technology Index Fund, because that's the most risky of all these funds, so that's why it's only getting 10% of my total income that's going into these funds each and every month. Another thing I want to show you guys, if you really want to dive deep into these index funds and find out what is actually in them, when you put the ticker symbol into your browser, VFIAX, you're going to click on holdings, right? And this is going to show you, once you scroll down, everything that is in this index fund. So it's 10% in consumer cyclicals, 12% in financial services, 12% in healthcare, 30% in technology. And then right here, you can see the top 10 stocks that are in this index fund. And these top 10 stocks make up 32% of this entire fund. So we got Microsoft, Apple, Nvidia, Amazon, Google, Meta, Berkshire Hathaway, Eli Lilly, and Broadcom. And I like that not any one of these stocks is really over 7%. So it's a very diversified index fund. So if one of these companies kind of shits the bed, you're not going to get beat up too bad. And if you look down to the 5-year average return, you're going to be getting around 15% each and every year, plus the small dividend that they contribute to your ongoing portfolio. All those dividends that you get are just reinvested back into your portfolio. So that's how that snowball starts to come and you really start to grow your account. That's how we were able to grow this account to over $124,000. These are the first steps you want to take in figuring out how to invest your money in your 401k. If you figure out the average rate of return for 5 years, you can kind of estimate just how much money you're going to get on the money you have in each of these funds. Everything I just showed you are the steps that I took to grow my 401k into a 6-figure portfolio. And I would take the exact same steps if I had to start from zero. I think if you follow the steps that I set forth for you, it's going to put you on a great trajectory for investing your money for your retirement. There's not a lot of steps, but you have to put the work in. You got to see which funds are available in your 401k, do a little bit of research on them, and figure out risk to reward, what type of mutual funds and index funds fit you and your family. If you have any questions, make sure you leave them in the comments below. If you would do me a huge favor and subscribe to the channel, I would really appreciate it. Thank you so much for tuning in. I hope this video was a big help. We'll talk on the next video. Thank you. Peace.